There are nearly 30 counties in North Carolina at the time that we are talking who are actually putting tax increases on the ballot. That would be either the sales tax or the land transfer tax, or I think in some cases, Michael, they're putting on both and letting voters then decide
That's right.
Which one they would like. Mm-hmm. So, Michael, why are they doing that?
Well, I think counties are always looking for more money for one reason or the other, and they need to find a convenient excuse to go to the taxpayers. And so here is one of those opportunities. It's an opportunity to gouge the taxpayers for more money and use smoke and mirrors to fool the taxpayers and the voters into the fact that they think they need more money.
Well, Michael, you say gouge the taxpayers, but the voters are going to be asked to decide whether or not either of those would be approved. So really, isn't that a good thing? Isn't that our democracy at work?
Absolutely. But there's two caveats to that. One is that the county commissioners in these counties had a meeting with the County Commissioners Association statewide and were given a day-long conference on how to convince taxpayers to approve this. In addition, county commissions all across the state are passing money, some cases $20,000, $30,000, to pay for what are called educational campaigns. And so this is a concerted effort to bias the voters in favor of these without giving them balanced information that lets voters decide on both sides. It's really ironic that taxpayers' money is being used to propagandize the voters to increase and improve higher taxes.
Well, Michael, what I hear at least some county commissioners saying is, hey, look, a lot of new people are moving into the area. The new people plus the folks who are already living here are putting a demand on county commissioners for more and more services. So the commissioners say, hey, we got to look for revenue somewhere.
Well, absolutely. The growth is a key issue. But what we hear from county commissioners and other interest groups in this area is just a unfounded claim that growth doesn't pay for itself. We have to build all these new school buildings. We have to improve roads. There's no money for this. Well, when we look behind the scenes, what we find is that on a per capita inflation-adjusted basis, every one of these 28 counties has increased revenues, and these are internal county revenues. We didn't count federal or state monies that flow into counties. So the amount of money that's raised within the county, adjusted on an inflation per capita basis, has increased in every one of these counties. So growth does pay for itself. The new people are paying their fair share and more than their fair share of county revenues. The matter is not the revenue side, it's the spending side.
Michael, do any of these counties actually have what's called a cash reserve?
Yes, the state mandates a cash reserve of 8% of their budget, and that is very important. We don't criticize that. They should have a rainy day fund to handle emergencies. But in many cases, the counties are 15, 20, even 30% more in those cash reserves. We found that many counties could delay, that the amount of money brought in by the proposed new taxes is much less than the existing cash reserves over the 8% that's required. In other words, some counties have 2 and 3 years worth of money sitting in cash reserve that they could delay these tax increases for those years, use the cash reserves instead of the tax increase, and then look at the situation a couple years down the road and see if a tax increase is necessary.